Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Thursday the 13th of August. We've got interesting rolling over actually on Treasury yields primarily, which is sort of driven a little bit of a risk retracement. You can see equity markets slightly lower in Europe. FTSE's lower basically on ex-div. A lot of big stocks going ex-div then today, but US futures slightly back. We had a strong session on Wall Street last night, again within a hair's breadth of the all-time high on the S&P 500. Futures slightly ticking back today, but that is coming as we've seen that Treasury yields have sort of shown signs of rolling over a little bit. A little bit of a consolidation really on the 10-year and the 2-year. Very mild yield curve flattener with the yield spreads tightening. That's sort of driven a little bit of a dollar correction through the markets and a bit of a stabilisation on gold. That gold volatility has started to settle down a little bit, but you can see that dollar just started to roll over a little bit today. But aside from that, there's not a great deal of direction, and you've got the likes of euros, dollar, sterling, dollar, dollar. Well, euro, dollar, sterling, dollar, basically consolidating in their sort of 2 to 3 week ranges. You've got the Aussie dollar, which is basically flat. Kiwi is a bit of an underperformer. We had the RBNZ yesterday, monetary policy decision, and it sort of talked about further policy easing, but also the prospect of negative rates, and that sort of has weighed on the Kiwi, and I'll talk about that in my my chart of the day actually on the Kiwi in a little bit, but yeah, not a huge amount to change the narrative today. Now, in terms of data points, not a great deal really. What we do have is the US weekly jobless claims. Now, let's see, to go on here, you can see the jobless claims are expected to be 1.12 million. Now, we had a much better than expected jobless number last week, and as you can see, that yellow line there, decisively lower actually, but can it continue to fall away? Because previously to that, the jobless numbers had been stabilising or rising, so it'd be interesting to see how the jobless numbers come out today for the US, but we could have a bit of action this afternoon on the dollar due to that. But aside from that, we're fairly settled actually. Now, in terms of my chart of the day, as I said, Kiwi dollar has been an interesting mover actually in the last few days actually. What you've seen is that the Kiwi is under pressure. The US dollar has been strengthening, yes it has, but also we've started to see Kiwi underperformance, and that's coming through that sort of assessment through monetary policy that is just a bit bit more dovish than the market had been sort of looking at, and it seems as though this Kiwi has rolled over. It's sort of decisively now broken under 66 big figure, which has become a basis of resistance actually yesterday and into today's session. As the market's fallen over, we're starting to see lower highs forming. That Tuesday's high at 66.25 seems as though that the old sort of 66 big figure area, which had been supportive, is now sort of an area where the market is looking to sell actually rather than buy, and I think that's a bit of a change of tone. You can see through the the daily momentum indicators, much more correctively configured. RSI 46, that is the lowest since May. MACD lines falling away decisively, stochastics at multi-month lows as well. So yeah, this is starting to look as though it's a market that's selling into strength rather than buying into weakness, and it'll be interesting to see how the dollar plays into that, because obviously this dollar rally has just rolled over a touch this morning, not necessarily sort of faltering on the dollar decisively, but is it going to still be a move that falters on the Kiwi dollar around that 66 mark? Looks like it is going to be doing that. So testing the support at 65.25, could be on 65 figure as a key level. If that breaks, that is a first real higher low that had been broken throughout the recovery. We could start to then see a more considerable correction to 63.70. So, with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website, sign up for our webinars, and also go to watch our Trader Talks videos to give you top trading ideas.